Hi, it's Richard Galvin from DACM. I wanted to welcome Brian Kerr, who's the co-founder and CEO of Kava Labs, to Real Vision. Welcome, Brian.
Thanks for having me, Richard. Happy to be here.
I met the Kava team, which seems like decades ago now, but it was back in sort of mid-2018 when they started putting their project together. They were one of the earliest players in what's now called DeFi. And interestingly, they're one of the key players outside of, I guess, what you'd call the Ethereum ecosystem. So I think Brian's perspectives on how he sees DeFi developing and how Kava's positioned in that should be really interesting for the audience. But before we get to that, Brian, I think it's probably worthwhile. Let's just touch upon, I guess, the origin story of Kava and how the team came together.
Oh, man. Yeah, I'm happy to jump into that. I mean, you remember in 2018, me and my co-founders had a very different focus. We were focused on doing crypto payments, so swapping between different assets of Ethereum and Bitcoin, and we even had DAI, and we were using a non-custodial wallet that linked together things like Lightning with payment channels and DAI payment channels, and allowed people to swap between those assets anywhere in the world, and made the markets for those. But we quickly realized that going into 2019, that just crypto payments it just wasn't scaling like we thought it would. We thought crypto payments was going to take over the world, be the biggest TAM, the biggest market opportunity. But we quickly realized in 2019, following the bear market, that while crypto exposure and speculation in the markets was a primary driver and a real use case, crypto payments was really struggling to take off. There were companies like Ripple forwarding kind of that initiative on the institutional side. We were trying to forward that using interledger technology on the more decentralized side of things. But we quickly realized that the total crypto payments in the space at the time was roughly $30 million a month. And that's, if you're collecting, a few points on that, you're collecting the spread between those payments. You need to have very substantial volumes to support any type of high growth business. And it just was, we knew at that time we were years away from being well positioned to take advantage of that. The markets just weren't ready for that type of product. So we forcibly had to pivot. We saw the success of MakerDAO giving ETH speculators a way to get margin in a decentralized fashion with loans and DAI. And it was actually through one of our other investors, Ripple. They asked us to put together a proposal. So we were more like a software and development shop at that time. They asked us to put together a proposal for effectively like a MakerDAO system, but using XRP as collateral. And we went to the whiteboard and we drew up a design, and it was effectively a sidechain that was able to take assets on XRP, move it over, move it to the sidechain, and then use it as collateral where we could issue our own stablecoins. And really the goal for Ripple's perspective was they wanted to have a stablecoin that they could give to their remittance businesses, money service businesses that were using their XRapid products and others. But once we designed that, we realized, well, actually, shoot, we could just design this for all the other assets. We can make a generalized lending platform. And from that point forward, we really did a 180. We pivoted fully mid-2019, and we launched the Kava platform as it's known today, which at the time was a single application blockchain that offered collateralized loans on a variety of digital assets. But really that laid the groundwork for what we're doing now, which is a whole portfolio of financial services for crypto.
And when you came to that decision how to build out Kava, and you went down the Cosmos Tendermint route, how did you form that as the right sort of technology for the base you wanted to build, and how have you found that compared to, I guess, the Ethereum ecosystem that's been developing around you?
Yeah, so we did a lot of layer one development at that time. As I said, we did a lot of building with Ethereum payment channels, Ethereum side chains. We did a lot on the XRP ledger. We also did a lot with Lightning as a potential scaling solution and payment solution for Bitcoin. So we really understood all the different layer ones that had got adoption at that time. Not just those, but well into the top 50 crypto assets. We did a bit of work on all of them. And it was just so obvious to us that there was clear trade-offs. No matter what platform you went to, you just have to choose if you want to have high throughput, if you want to have real decentralization, if you want to have scaling. And these layer two solutions just really weren't, the sacrifices you had to make layer two work just didn't make sense. So it seemed like all the trade-offs had to be done at the layer one base level. And if you take the view that everything is going to be interoperable in the future, and these different layer ones can specialize in doing one thing well, and then be combined by developers to then create the ultimate end application for users, like that design paradigm just seemed to make a lot of sense. And that future world view, what was also just like our point of view at the time. So when we designed this sidechain for Ripple, and then we spun that off and used the Cosmos SDK and Tendermint to build our own standalone blockchain for DeFi services. The thought process was, we need something that could scale. We wanted to design our own security model for these applications. We foresaw, all the way back in 2018 when we were messing around with Ethereum and payment channels and everything else, just there was going to be serious scaling solutions. There was going to be a lot of attack vectors, given it was an open smart contracting platform. You don't want to have financial services built on something like that in production, especially coming from traditional financial services. You would just never design a system like that where there's just open-ended tail risks. And we also knew that we wanted to have the economic models that back the whole thing, that gave it really cryptographic economic guarantees that the whole system was going to function. We had to just do everything from the ground up. So we needed our own blockchain to build this system that we wanted to do. And then the other thing that was really important for us as we were looking around the space was, well, first off, we needed control in the early days. And we also very honestly, we're not P2P gossip protocol developers. We're not consensus developers. We're application developers, really, at our core. We understood the layer ones, but we had no interest in kind of building our own consensus model. That takes years of work, and we were really interested in just being pragmatic and getting an application out that the world could use. So when we looked around at what frameworks were available for developers at that time, really the Cosmos SDK was the only thing that was available that had a programming language in Golang that would make sense for financial applications. It got around the solidity and the attack vector problem. We looked at Substrate and the what was going on with Polkadot, but that was just far from even reaching production. And roughly they were on par with each other, so there wasn't like a good reason to wait around. And actually, our developers preferred Golang over Rust anyway, which is what the Polkadot ecosystem and all those things are built on. So when we looked at all the pros and cons and just pragmatically what could we get to the market in the fastest without really sacrificing anything, Tendermint and the Cosmos SDK made a lot of sense as a framework to use. And we were able to go to market actually within less than 6 months after we set out to build the Kava platform. So I think it accomplished those goals pretty well.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.